Welcome to the September 9th, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with a fast-paced tour of the global financial markets that you get each and every week right here on YouTube. And when there is fast-breaking market news, you'll get a special alert if you're subscribed. And it's easy to share with your friends. If people are asking you, what are you doing on your finances? Well, just send them the link and let them see for themselves. A graphic tour is important because I take a 1-month Dow right here, okay? Dow Jones Industrial Average, representing 30 of the blue chip stocks, similar to the S&P. Notice these downdrafts, and yes, those were trade war headlines. What's this? Oh my gosh, this week on Thursday, the Dow spikes nearly 500 points at the highs of the day, closes up about 400. What happened? Well, apparently it went like this somewhere in Washington. Hey, Mnuchin, the Chinese are on the telephone and they want to meet in October. Wow. This is just a phone call. Imagine what a whole trade agreement might actually do for the markets. We could break out of the range-bound market we've had since early 2018. Don't count that possibility out, because notice the program trading that hits the trade war headlines like that, and then just a simple phone call causes this. Here we got rounds of ugly tariffs and Xi and Trump throwing things at each other in the schoolyard, but boom. That's just a phone call. What happens if they get together in October? Oh my gosh, here we go. Now, what's the real story on the economy? Well, this chart's pretty clear. That's a good chart, right? And if you look at it, this is Dallas Federal Reserve employment in the 11th district, which they control, Texas, Louisiana, part of New Mexico, and things look like they're just fine on the jobs front. 130,000 new jobs last month. According to the Bureau of Labor Statistics, ADP estimated private payrolls could be as high as 195,000. But what is that? Well, it's not a recession. At least it's not yet. And we'll bring you that news if we start to get data. Some of the manufacturing numbers came in, slight contraction, and we're watching those close. Inversion, uninversion. You heard inversion of the yield curve means we have a recession. Well, not so fast, right? We've covered the fact the rates in Europe, a lot of them are negative, which means you pay money for safety, but you don't really get safety because the 10-year German bond is a -1, and if rates go to 1, you're going to lose some money. Well, look at this. What we see right here, okay, is the actual interest rate on the T-bill, the short-term treasury, 90 days. The 30-year treasury, 2.02. It inverted. The 30-year treasury went below the T-bill briefly, but it uninverted this week, a mere 12, 13 basis points for going way out 30 years in duration. But that did uninvert, meaning that this could be just simply a head fake. Net present value of future cash flow is a concept that I want to revisit and help you to get your arms around. When you buy a building, they do it on cap rate. You want to make 10%, you pay 10 times the net cash flow, right? Well, the cap rates on what we're paying here for the T-bill, well, you have to put in $68 to make $1 in a 10-year treasury each year. That's 68 times earnings. Dividend companies priced much more attractively at about 17 times earnings, and dividend companies that pay over 5%, net present value of future cash flow is worth a whole lot more when you just compare it to a 2% treasury. That's part of the reason for this rally. Institutions driving, where am I actually going to get the return? And dividend companies may look even better here. If we go to Texas Instruments, I just had a shout out. Texas Instruments hit an all-time high this week, $130. I'll tell you the rest of the story in the next graph. But notice TI breaking into new high ground despite all the talk of trade wars and the ugly things that are going to happen. Texas Instruments has done a great job of managing their cash flow, by the way. But let's look at the tech wreck all the way back. Texas Instruments hit $100 for the first time back at the turn of the millennium and didn't see it for a very, 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 very long time. These shareholders had to have a lot of patience because it went below 20 a couple of times. Ouch, the last time was back here in '08. Good buying opportunity, now 130. Of course, if you bought it when everybody else was in love with it back there, you had to wait a good long time for a new high. What's the point here? Well, Texas Instruments doing good, a good example of a semiconductor prospering beside, even with the trade wars. But also be careful of the price you pay. That's why NetWorthRadio.com is a must visit each week with our YouTube channel as well. We told you to not to, and that was the Lyft and Uber IPOs. It sounded really good. They do lots of revenue, but they were losing money. So Alex and I told you at NetWorthRadio.com, this doesn't look like an IPO where you want to participate. We now have the evidence that that warning was correct. We see $45 here, $89 right there on the first day of trading. Wow, that was Lyft, and they need a lift at this point just to get back to even. Now, $47 was the high on Uber. It came public right there, and we're below that at 32. Don't buy money-losing companies is generally my rule. And every time I break my rule in investing, I usually don't do well. So I'm sticking with the rule. If they're not making money, don't do it until they are. All right, gold. Should I buy gold? That's always a question. And I've got the real story on gold here. We went from about $1,200 an ounce at the lows last year to $1,500. It's supposed to be an inflation hedge. Well, I've got the real story here. How much inflation did I hedge if I paid $1,900 for it back in 2011 and I got no income? I'd rather have some dividend companies, some energy infrastructure, a good global high yield fund at a discount than just to sit in gold and hope it goes up. Matter of fact, the worst 22 years of gold in modern history, it went to 800 when inflation was high, and 22 years later it was 250. How did that work out as an inflation hedge? Prices doubled, gold got chopped by 2/3. I'm Spencer McGowan, your financial weatherman, president McGowan Group. Thank you for tuning in today, and be sure to recommend us to your friends that ask about finances. This is a great place to start. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.